This is Chad Staskal. I'm one of the founders and managing partner of Eagle Wealth Management, based in beautiful Bend, Oregon. This month, I want to take some time to talk to you about the market volatility we've been experiencing since the COVID-19 outbreak. 2020 started out calm, with most major U.S. stock market indexes increasing a few percentage points in the first 8 weeks of the year. Then, on February 23rd, the markets began to realize that COVID-19 was not just going to be a China problem. Over the next month, most every major U.S. stock market lost over a third of its value. By May, stocks had rallied, sparked by a supportive Federal Reserve, stories of states reopening, and progress toward a COVID-19 vaccine. In fact, after bottoming out on March 23rd, the S&P 500 actually wiped out its year-to-date losses on June 8th. You're probably wondering, how is this happening even though our economy is still in crisis? Well, at the time, investors chose to focus on future economic hopes rather than current woes. But what happens next? Well, June 11th, the major U.S. stock markets is all dropped by over 6% in one day alone. This was based on a COVID-19 cases rising in a number of states, weekly unemployment numbers, and cautionary comments by the Fed chair. So with all this continued volatility and facing so much uncertainty, what should you do? First, ignore the emotional roller coaster that many investors are giving into right now. I know it's hard, but it's important to stay disciplined and avoid decisions based on emotions and fear. Instead, take a deep breath. Remember, the markets have always bounced back in the past, and stay invested. Our job is to help you get through times like this. Which leads me to my next point. Ignoring your long-term financial plan and trying to guess what's going to happen in the short term is usually a bad idea. We focus on investing, not day trading. I cannot tell you the number of people who have told me how much money they've lost in the stock market, even though almost every major index is near all-time highs. Why is this? Because investment decisions were made based on emotions or short-term concerns instead of based on goals and a financial plan. If you've ever tried to time the market, you've probably discovered it's extremely difficult. Take a look at this chart, showing the average annual return of a $10,000 investment in the S&P 500 for the last 20 years, from January 1st, 2000 until December 31st, 2019. Considering there are over 5,000 trading days in the last 20 years, and if you'd missed just the 10 best days, you would have lost over 64% of your gains, as the average return drops from over 6% to 2.18%. And if you only missed just the 20 best days, that would have an average of missing just one day a year. You would have lost all your gains for the entire 20 years. The amount of media selling fear in mid-March was unbelievable. And we had a few calls asking, what should we do? Considering 6 of the 10 best days came within 2 weeks of the worst days is a pretty good sign we should stay invested. And this is why we stay in the market. Yes, we make changes and actively manage portfolios during times like this, but we ride out the storm and stay confident knowing our financial plans are still secure. So, we know we need to avoid emotional decisions and we need to stay invested. So what should we do during times of volatility? The best thing you can do is focus on the things that you can control, the things that really matter for your financial plan, and that you can make an impact on. Tax strategies, managing risk, diversification, budgeting, and most importantly, holistic, smart planning. If you're a client, we've done these things for you. Together, we created a financial plan based on your goals and dreams. And now our team is working hard to communicate the solid facts and logic around the ups and downs of the market, and not just try and blast you with some of the extreme views and fear you're going to hear from some others. Here's what to expect. Volatility will continue. It's normal, and declines are inevitable, especially during a pandemic. The really amazing thing about the markets is that every time in history, it's come back, and it's come back higher. Every time. Now, of course I can't promise you it's going to come back, but looking at history, it seems pretty likely. So buckle your seatbelts, it's going to be a bumpy ride, but we're here to help you get through it. Please reach out if you have any questions or need to update your financial plan. Or if you just need some reassurance, we're here. Every day, we're thankful for our clients and they've given us the opportunity to do what we love. Through good times and especially challenging times, we promise to be here. This is Chad Staskal, Managing Partner of Eagle Wealth Management, signing off for June 2020. Please continue to be safe while looking for the good in every day. Take care.